Hi guys, welcome to my channel. This video is about how to invest in the stock market. So after this video, you should have a solid understanding on what the stock market is. Guys, it took me some time to make this video and I hope you get as much information as possible. So when you're buying a share in a company, you are basically buying a fraction of ownership in that company. So what people do is that they buy shares in companies that they believe that they will grow in the near future. So as the company grows, the share price of the company also grows or also increase. So when you buy a share in a certain company, let's say you buy a share in a company X, when company X grow, the share price of that company also grows. So basically, that's what people are looking for. The second thing I want to talk to you about is account, or how to choose a broker, because it's easier for you, or people buy shares in different companies through a certain broker. So what advice I can give you in this is that you need to find a broker that is easily accessible, preferably a broker that has an app, because then you can easily access your investments and check and see how your investments are doing. Now we come to the third point, how to analyze a company. Your main goal should be to buy shares in companies that are undervalued, because that will give you a guarantee that you will get a good returns on your investment or on the shares that you bought. Buying a stock on a company that's overvalued is not advisable. It's not a good move, simply because the chances of you to getting good rewards from that are very slim. So it is very important for you to know some key terms that will help you analyze the company that you want to buy. So it is quite advisable and important for you to analyze a company correctly before you go out there and purchase the shares in that company. So below are some of the key terms that can help you analyze the company that you want to buy shares in. Number one, the PE ratio. Now, PE ratio is basically price to earning ratio. So this ratio is used to value the company. So it determines if whether the company is overvalued or undervalued. So an average PE ratio range between 13 and 15. 13 to 15. So anything below 13, it simply means that the company might be undervalued. Anything above 15, it simply means, or it might mean, that the company is overvalued. So it's important that you really know the PE ratio of the company that you're buying. A high PE ratio could also mean the company has got a potential to grow very fast. So it's important for you to really know what is causing the PE ratio of a certain company to be high. Now we are going to another term that we use to analyze a company. And this term is the ROE, return on equity. Now this measures the financial performance of a company. So the higher the value, the better. So if the return on equity, or the ROE, is 14%, that's acceptable. But anything less than 10%, it's regarded as poor. But anything above 14%, it's regarded as good. Now, the last key term that we'll look at now is current ratio. Now, current ratio measures the ability of a company to pay its debt. So on this ratio, anything more than 1, it's regarded as good, whilst anything below 1, it's regarded as poor or bad. But these guys depend on industries, but in most cases, you would not want to buy shares in a company that is not able to service its debt. You would not want to buy shares in a company that has too much debt. So to get this current ratio, you simply divide your assets by liabilities. So it's assets, total assets divided by total liabilities. That will give you your current ratio. If it's more than 1, then it's good. But if it's below 1, then there's something wrong. You just need to check what's really causing that company to get a current ratio of less than 1. Now guys, there are so many terms, there are so many key terms that you can use to analyze a company. There are so many of them, and I don't think we can cover all of them here, but I recommend that you go to Investopedia. and just check some of the terms that that we didn't discuss here. I would also recommend that you have a look at this book called The Intelligent Investor by Benjamin Graham. It's quite a good book, and it helped me a lot. It really gave me a thorough detail on what the stock market is and the things that I need to look at when I'm investing in the stock market. So I'll be posting tons and tons of stock market investing videos in this channel. I will also be showing you some of the companies that I invest in, or some of the companies that I have shares in, and the reason why I bought shares in those companies. Guys, there are so many companies that are undervalued at the moment in South Africa simply because of the current situation we are in. It has affected so many businesses. So the stock prices or the share prices of many companies, you are buying shares at 70% discount, you are buying shares at 50% discount, and so on. So it's better you take an opportunity of getting into the stock market now while prices are still affordable. Ladies and gentlemen, let me also remind you or let you know that though there are many companies that are undervalued, there are also companies that are overvalued. And remember what we said in the beginning of this video, to say that it's not advisable to buy companies that are overvalued simply because it becomes difficult for you to get good returns. Once again, guys, thanks for watching, and see you in my next video. I hope you tune in, hit that subscribe button, like, and comment and tell me what you think. Thank you very much, and see you in my next video.